Hello, it's a simply glorious Friday the 9th. I'm FX Blue and this is the market brief. Now, there are growing concerns that the SME sector may suffer a mini credit crunch as the economy opens up. Businesses may find it hard to obtain the financial support to help their cash flow pressures that may develop as employees, landlords, utilities, all the expenses will still need to be paid, regardless of how long it takes for sales to pick up again. Where the business lacks the cash flow reserves to cover this internally, traditional routes like banking finance are expected to be harder to access due to the commercial risk profiling and the perceived viability of these businesses. In order to avoid business failures, therefore, Sunak, dear old Sunak, may have to step up and bridge the gap again. We're seeing something similar with the effect of FX hedging. It's one thing to help businesses remove the FX risk for the rest of the year, for example, but more providers are demanding collateral against forward contracts in order to reduce their counterparty risk. That's in case the businesses can't meet the obligations later in the year, of course. That said, you'll find FX brokers are generally much more supportive, aiming to help their clients find a solution that works, whilst the nasty banks will of course be more of a case of computer says no. But the principle is certainly similar. The short-term outlook for the economy is still very positive though. Inflation is expected to pick up once the economy starts to reopen, and the Bank of England is likely to keep monetary policy looser for a while longer. Sterling remains supported from the success of the vaccine programme, but more and more it's becoming reactive to the dollar these days. We saw a narrow trading range yesterday with a low of 137.20, and we open ever so slightly lower around 136.75 this morning. Powell's been on. He spoke of how the one-off rise in inflation attributed to, a pandemic is very different to a systemic rise driven by the economy's economic cycle. Without getting deep into the economic justification, he claims that what we have coming isn't actually inflation, but rather a product of restricted supply. But whatever you want to call it, the market is expecting inflation to rise as the economy returns to normal, and the Fed is trying to assure everyone that it will be controlled. And they might be right. Don't forget, the Fed was struggling to achieve their 2% inflation target in normal conditions pre-pandemic. However, when a central bank feels the need to constantly reassure markets, concern does start to creep in that the future may not be quite as straightforward as they claim. Everyone loves a conspiracy theory after all. Yesterday we saw weekly jobless claims come out. They were a little disappointing, with initial claims remaining above 700,000, and the dollar lost ground on the day. We saw euro dollar move higher. We touched 119.30 there. Right, that's it from me. Have a wonderful weekend. Do join me again on Monday, and hope the sunshine stays for your weekend. All the best.
If you do not have a clue, then just tweet through and ask FX Blue.